Alright folks, we need to talk about this because this latest disclosure genuinely stopped me in my tracks. Nancy Pelosi, who at this point honestly feels less like a part-time politician and more like a full-time elite trader, just made a series of aggressive stock moves totaling millions of dollars, and the timing alone is enough to make anyone paying attention raise an eyebrow. Her most recent disclosure just dropped, and I'm not exaggerating when I say this one is packed. We're talking about Big Tech Reloads, a lesser-known AI healthcare company that most people aren't even watching yet, a defensive dividend play that feels very deliberate. And then at the top of the list, an under-the-radar energy and data center infrastructure stock tied directly to the AI boom that almost nobody in the mainstream financial media is talking about. And before we go any further, I just want to say this. A lot of people love to talk about Warren Buffett, and rightfully so. The man is a legend, he's had an incredible career, and his long-term track record speaks for itself. But Nancy Pelosi is playing a completely different game. This is not buy and hold Coca-Cola for 50 years. This is precise, aggressive, well-timed positioning that just so happens to land right before major regulatory changes, policy shifts, contracts, and industry tailwinds. Over the past decade, her portfolio has outperformed an absurd number of professional money managers on Wall Street, to the point where people literally stopped laughing and started building ETFs designed to track her trades. Think about that for a second. There are investors out there saying, why would I pay hedge fund fees when I can just follow what Nancy Pelosi and her husband are doing? Now, I'm not here to tell you to blindly copy anyone's trades. Always do your own due diligence. But when someone with access to policy discussions, regulatory frameworks, and geopolitical negotiations consistently ends up on the right side of massive market moves, you at least owe it to yourself to pay attention. So today, we're breaking down the 5 biggest Pelosi trades that were just disclosed. Not just what she bought, but why these moves matter, what they signal about where money and power might be flowing next, and what it potentially says about the broader market in 2026. Let's start with the one that most people probably skipped over at first glance. The first company is Tempest AI, ticker symbol TEM. This is not a household name. This is not NVIDIA. This is not Apple. This is a small cap, AI-driven healthcare diagnostics company that flies under the radar unless you're really paying attention to the intersection of artificial intelligence and medicine. What Tempest does, in simple terms, is use artificial intelligence to analyze enormous amounts of medical data. We're talking genomic data, lab results, clinical records, imaging, all of it. The goal is to help doctors personalize cancer treatment. Instead of a one-size-fits-all approach, they're using AI to help tailor treatments to individual patients based on massive datasets. This is big data colliding with healthcare in a very real, very practical way, and their business model reflects that. They sell AI tools to hospitals and research institutions, and they partner with pharmaceutical companies to speed up drug discovery. That alone should tell you why this is such a powerful space. Drug development is slow, expensive, and risky. If you can use AI to shorten that timeline or improve success rates, the economic value is enormous. Now here's where things get interesting. Pelosi didn't just stumble into this trade last week, she started accumulating exposure to Tempest early last year. In early 2025, she grabbed call options, and then, just 8 days later, Tempest announced a groundbreaking AI healthcare application. The stock exploded. Her call options reportedly jumped roughly 300% almost overnight. Now, is that a coincidence? Maybe. Can I prove otherwise? No. But when you see patterns like this repeatedly, at some point you stop dismissing it as random luck. Fast forward to 2026, and here's the key part. She didn't just cash out and walk away. She exercised those options and took actual ownership of about 5,000 shares. That's important. She could have sold, locked in the profit, and moved on. Instead, she chose to hold equity. That's a bullish signal. So why Tempest? Well, if we're being honest, Pelosi is deeply connected in healthcare policy. She's been involved in steering billions of dollars into healthcare initiatives over the years. If there were regulatory tailwinds forming around AI diagnostics, reimbursement frameworks, or data usage approvals, she'd be far closer to that information than the average investor. And again, we're speculating here. But when you're in positions of power, you're talking to CEOs, hospital executives, pharma leaders, and policymakers, especially in California, especially in San Francisco, where biotech and AI intersect constantly. Information flows differently at that level. And then, months after her initial purchase, Tempest lands a $200 million partnership with AstraZeneca. That's not a small validation. That's a major pharmaceutical company putting serious money behind the technology. To me, this trade screams long-term conviction in AI healthcare, not a short-term flip. Now let's move to something more familiar but no less interesting. Apple. Ticker A. APL. At first glance, this looks boring. Apple is everywhere. iPhones, MacBooks, AirPods, services revenue, App Store fees. It's basically treated like its own ETF at this point. But here's the thing people are missing. Apple is no longer just a hardware company. Apple is becoming an AI company. They're integrating generative AI across their ecosystem. Siri is getting a major upgrade powered by Google's Gemini backend. That alone has massive implications, not just for user experience, but for data, services, and competitive positioning. Now Pelosi's Apple trades caused some confusion in the headlines. She sold 45,000 shares and donated another 28,200 shares to charity. The media immediately ran with the idea that she was dumping Apple, that she'd turned bearish on tech. I don't buy that narrative at all, because right after that, she turned around and bought call options with a $100 strike expiring in January 2027. That's not exiting, that's reloading with leverage. That's saying, I still believe in this company, but I want asymmetric upside. This looks like a bet on the next iPhone supercycle, driven by AI integration. It also looks like a bet on Apple navigating supply chains and trade relationships better than most people expect. Remember, Pelosi made a very high-profile visit to Taiwan in 2022. That trip wasn't symbolic. It put her at the center of U.S.-China trade tensions and semiconductor supply chain discussions. She would have had insights into diversification efforts, manufacturing strategies, and geopolitical risks that retail investors simply don't have. And let's not forget, congressional committees are briefed on antitrust issues all the time. The Apple-Google Siri deal has antitrust implications. These things don't just appear out of nowhere. Lawmakers hear about them long before the public does. So when I see Pelosi maintaining exposure to Apple through options even after trimming shares, my takeaway is this. The people inside the system are still bullish on big tech. They're not running away from it in 2026. They're repositioning within it. Next up is Alphabet, ticker GOOGL, Google's parent company. This one makes a lot of sense, but it's still telling. Alphabet controls roughly 91% of global search. It generates hundreds of billions in ad revenue. YouTube, Android, Google Cloud, AI research, it's everywhere. Pelosi has been accumulating Google for years. Roughly 14% of her portfolio has been tied to it at various points. In this filing, she exercised call options, donated shares for what is almost certainly tax planning, and rolled into new January 2027 options at a $150 strike. Why does that matter? Because Congress has spent years talking tough on antitrust, hearings, lawsuits, press conferences, and yet nothing meaningful has happened. Alphabet is still intact, it's still dominant. My personal view here is that Pelosi doesn't see a serious breakup coming. If she did, she wouldn't keep this level of exposure. The fact that she's held through every scary headline tells me she believes the regulatory bark is louder than the bite. And then there's Google Cloud, federal contracts, Pentagon deals, AI research partnerships. Who would have better insight into the likelihood of those contracts than someone who used to be Speaker of the House? This trade tells me that, behind closed doors, the narrative around big tech is far less hostile than it appears on cable news. Now let's talk about the curveball. AllianceBernstein, ticker symbol A-B. This one really stood out to me. This is not a growth stock. This is not an AI darling. This is a global asset management firm. They manage over $800 billion in assets. They pay a dividend yield around 8%. Pelosi bought 25,000 shares outright. No options. Just stock. That's roughly $1 to $5 million. Why? In my opinion, this is defensive positioning. After years of heavy tech exposure, this looks like a move to generate income. That dividend pays you to wait. It cushions volatility. And here's where speculation comes in. Members of Congress receive Fed briefings. They talk to policymakers. They understand interest rate dynamics better than most. If you thought rates were going to stay higher for longer, or that volatility was coming, owning a steady income-producing asset makes sense. This trade tells me she's not just chasing growth anymore. She's building resilience into her portfolio. And now we get to the one that really deserves attention. Vistra Corp, ticker symbol VST. This is the trade almost nobody is talking about, and in my opinion, it's the most important one. Vistra is a utility company, electricity and natural gas. About 5 million customers across 20 states. Sounds boring, right? Not anymore. Vistra has been expanding its nuclear energy capacity, and that puts it squarely in the path of the AI boom. Data centers consume massive amounts of power. AI workloads don't sleep. They need constant, reliable electricity. Nuclear provides baseload power 24/7. No sun, no wind, no interruptions. Vistra owns nuclear plants in Pennsylvania, Ohio, and Texas. That matters. Pelosi bought Vistra call options in early 2025, exercised them in January 2026, and now owns 5,000 shares. Around the same time, Vistra signed a 20-year power purchase agreement with Meta. That deal covers 2,600 megawatts from 3 nuclear plants to power Meta's AI data centers. That's locked-in revenue for 2 decades. Coincidence? Maybe. But major energy deals require regulatory approval. Congressional committees get briefed. Pelosi would absolutely be in a position to hear about something like this early. And then there's the bigger picture. Congress has been extensively briefed on AI's energy demands. There is bipartisan momentum around nuclear power, grid upgrades, and data center infrastructure. Everyone is chasing chip makers. Pelosi is buying the infrastructure beneath it all. You can't run AI without power. Vistra also closed a $2.25 billion acquisition of Energy Harbor, adding 10 natural gas plants and 5,500 megawatts of capacity. This is a pick and shovels play on AI. It doesn't matter who wins the AI race. They all need electricity. When someone with Pelosi's track record bets on a utility company, I pay attention. So yeah, let me know what you think. Should members of Congress be allowed to trade stocks? Which Pelosi trade stood out to you the most? And with that caps off today's video. If you enjoyed the video, like, share your thoughts in the comments, and subscribe to the YouTube channel so you don't miss out on the next important analysis update. Thanks for watching, and I'll see you in the next one.